Assume the procurement manager of B provided you with the following variance analysis information. 55,200 actual feed purchased were made at 63 Rand per 60 kg of feed. Adverse or unfavorable feed purchase price variance of 6,072. Calculate the standard feed purchase price per 60 kg of feed. Except for the reasons already provided in the scenario, provide two more reasons for the above feed purchase price variance. Identify and briefly discuss two ethical concerns regarding MEPT that could potentially harm MP's reputation. Calculate the budgeted minimum transfer price of raw honey at which B will be willing to transfer to H for the harvest period ended 31 August 2019. Prepare the actual quantity statement of H for the month ended 30 April 2019. Calculate H's closing finished goods value as it will have appeared in the income statement for the month ended 30 April 2019. From a processing costing perspective, briefly contrast the treatment of normal loss value to that of an abnormal loss value in the income statement. All right. So you can see the topics that are here. You've got your on B, you've got your statement of profit or loss, right? Meaning you need to be aware if you are using your absorption or your variable costing method, right? And on part A, right, it has to do more with your product costs, right? Because they want us to calculate the budgeted annual harvest in kilograms, right? So it has to do with your product cost. And then part C, it has to do with your budgeted production over it. So it's all about overheads. And then number D, it's standard costing. And then number E, it's ethics. And then transfer pricing on F. And then process costing for G, H, and I. Now, so can you see with me just reading the required at the back of my mind, I've started already processing some of the information that could be in the scenario, but I'm able to identify all the topics that are covered in the required. Are you with me? So what does that mean, my friend? It means that I actually said to someone yesterday when we're doing MAC, but we are still at the back now. So I was saying to her, like, the issue, the problem is that people, especially when it comes to, it could be school or it could be other things then. We worried mostly about the surface issues, about the end results. We are not worried about the nature of what we are dealing with them. The moment you understand that, okay, what is the nature of cost management, right? You will see that your understanding, it does not only concern you getting a correct answer, but it goes beyond that. You are able to draw practical examples in the real world, and that's why you'll see me most of the time, I'll be using an example of amagwinya. You know what I'm saying? Because it's all about the principles. The principles of management accounting, they apply in anything that you see. Like, as an example, for a product cost when it comes to management accounting, we always say, depending, right, on the method that you are using, it always includes 3 or 4 costs. It could be your material, direct labor, variable manufacturing overheads. If I'm using variable costing method, I'm done. I'm only looking for all those 3. And then if I'm using the absorption costing method, I will add the fixed manufacturing overheads as my 4th cost in any product. So you might be looking at a book in front of you. You might be looking at a building. You might be looking at your laptop. You might be looking at your phone, right? For that product, there's only these 3 or 4 items that were included in valuing that product. You know what I'm saying?
Okay.
So that's the nature. You know what I'm saying? So we must not, like when we are studying, we must not worry ourselves a lot by just getting the correct answer. Ask yourself questions, ask yourself further questions rather. What does it mean when I've got this answer? Who does it affect? Remember when we're doing ratios the other time, we said when you're calculating a ratio, you should ask yourself who's going to benefit on this information That I am calculating at the moment. So you are not only limiting your answer from, or you are not only limiting yourself on just getting the correct answer, but you go over and beyond, right? You actually try and look for the person who's going to be benefiting from the work that you're doing. Does it make sense?
Yes, it does.
Okay. Let's then go read our scenario. So let me remove all of this. All right. Then we are dealing with Mitoli ByeBoer Private Limited, right? So they say this company is a private limited. What does it mean? It means it's not registered in JSI, right? Mitoli ByeBoer Private Limited has for 5 generations, right? For 5 generations farmed bees for the production of an exclusive brand of honey, which is called Mamepe for sale, right? Principle number 1 in a question, always identify what the company is producing or selling, right? Always identify what the company is producing and selling. You know what I'm saying? So we've already identified that this company is in the production of honey. And how do they get the honey? From their farmed bees. Right. And then they use that honey to produce, they use the output of the production to produce honey, which is called Mamepe. Ne? Yeah. And then they continue to say the secrets of its long existence are customer centricity, high moral and ethical standards, and being a responsible corporate citizen. Do you know what we call this? We call this a business model, right? What is a business model? Business model, it's stories of how a company makes its money, right? It's stories about how how the company provide its products and services to its customers. Do you understand? Let me give you one thing that you see on daily basis, right? The business model of ShopRite, right, is to sell, right? Is to sell their products at lower prices, right? And how do they do that? They do that by making sure that they don't spend a lot of money on rentals. It is only in few occasions that you will find ShopRite in up markets. Majority of the times, ShopRite, you find it, like in very basic places, in the townships, right? Or in just, an ordinary place. You know what I'm saying? It is not usual to find a ShopRite in up marketplaces because their business model is to ensure that they don't spend a lot of money on rentals. Are you with me?
I am.
So the business model of MB, right, is to put customers at the center of everything that we do, is to have high morale, is to be ethical, and being a responsible corporate citizen. This is a story of how this company makes its money and provides its products and services to its customers. And this is the reason why they've been in existence for 5 generations. Are you with me?
I am.
The company has a December financial year, which is important, and uses what? Absorption costing method, right? And values its inventory according to the FIFO method. MB's operations take place in 2 divisions, namely the beehive division and the honey processing division. The 2 divisions are managed by independent management teams. Bee farms, the bee division farms with the bees for the harvest of raw honey, while the H division processes the raw honey into Mamepe for sale to the public. Although no formal transfer pricing policy currently exists, the B division sells some of its raw honey harvest to the H division at a negotiated price between the two divisions. The rest of the raw honey harvest is sold to the external customers. The bee division. Bee division is an exclusive and specialist bee farming operation. The division owns and utilizes for farming its entire 30 hectares farm. This farm is rich in nectar-producing trees. Nectar is a natural feed for bees. To optimize this natural feed around the entire farm and reduce feeding cost, bee positions 5 wooden beehives, hereafter referred to as beehives, in each hectare, right, for the duration of the financial year. This positioning represents the maximum number of beehives and yields 3 harvests, right? One in period ending April, another one in period ending August, and another one in period ending December. So meaning their periods are divided into 4 months. Okay. During each financial year. For each of these 3 harvest periods, the standard harvest is 24 kg of raw honey per beehive per harvest. Extract from the actual results for the month ended 30 April 2019. Okay, sales 1.1. The total actual harvest for the period was 3,500 kg of raw honey. No harvest losses occurred during the period. BHD sold 2,300 kg of the total actual raw honey to external customers at 60 Rand per kg. The balance of the actual raw honey harvest was transferred internally to the honey processing division at a negotiated price, which was 25% below the selling price to external customers. The raw honey yield is dependent on the feed ratio, meaning on the feed standard. As a standard, the bees are fed, right? As a standard, the bees are fed 15 kg feed ratio to yield 1 kg of raw honey. So when we feed our bees 15 kg, they are able to produce 1 kg of honey. Né?
Okay.
The beehive division fed the bees a daily ration of 3 kg, right? Purchased feed bee. Oh, okay. The beehive division fed the bees a daily ration of 3 kg of purchased feed per beehive. Ne? Despite only a slight increase due to inflation, the feed was bought at 60 Rand, at 63 Rand per 60 kg, a price that was noticeably higher than the related set standard. The bees were fed on each of the 120 days during the period. The division had no opening or closing inventory for the duration of the period. The bee feed market is currently controlled by a few monopolistic cooperatives. The fixed farming overheads are absorbed on the basis of budgeted beekeeping time hours. A beehive division employs 3 full-time beekeepers, each working 8 hours per day, shift for a total of 240 days per employee per financial year. The actual hours for the period under review were 2,800. The annual budgeted fixed manufacturing overheads was 69,120 for the 2019 financial year. Okay, the annual budgeted fixed farming overheads of 69,120 for the 2019 financial year will be incurred evenly throughout the financial year. The actual fixed farming overheads for the period under review were 30,000. A special preservative is added to the raw honey sold to external customers. The actual cost of the preservative is 1 Rand per kg of raw honey. No preserves are added to the internally transferred raw honey. The variable selling and admin costs incurred on the external sales were 1 rand 5 cent per kg of raw honey. Beehive division insures its beehives with a clientele insurers at a total fixed monthly cost of 4,000. On 1 Jan 2019, 3 beehives with a carrying value of nil were stolen and immediately replaced with the new ones. On 20 April 2019, KTI confirmed that they will pay 605 insurance proceeds for the stolen beehives. However, this will only be paid at the end of May 2019. Beehive division has contracted Mapendana to pay the division's admin building at the beginning of each harvest period. The contract provides for a total painting cost of 12,000 per financial year incurred evenly throughout the financial year. MEPT came highly recommended, therefore, it came as a shock to Beehive division that MEPT is constantly being accused of shoddy painting work on municipal projects, in the main, dangerous and confusing road markings. MEPT is also known for painting the town red every weekend by hosting parties for teenagers and encouraging underage alcohol use. There were no opening or closing inventories of any types. Investigation to introduce a formal transfer pricing. Okay. They are saying MP is considering introducing a formal transfer policy, pricing policy to be implemented from 1 May 2019. In this regard, the budgeted transfer price for the remaining harvest periods for the 2019 financial year will be based on the actual results of the 4-month period ended 3rd April 2019 as per the above. For each remaining harvest period, the budgeted raw honey yield and the external sales will be 3.5 kg and 2.3 kg respectively. Right? The budgeted raw honey internal transfer is 1,500 kg per harvest period. The honey processing division, the honey processing division. Honey processing division owns a processing plant and operates a process costing system to produce mamepe. The production process begins with the purchase of honey processing division's only direct raw material, raw honey, from 2 sources. 1, the beehive division, and 2, the open market. At the plant, raw honey is put through the extraction process that separates honey from the wax to yield processed honey. The processed honey is then pumped into filter tanks that remove the remaining solids such as bee stingers. And the filtering process and the final product, mamepe, flows into cycling tanks before it is packaged into individual products for sale, each consisting of 500 grams of the final product. All the direct raw materials required to produce mamepe are added at the beginning of the production process. The direct labor cost and production overheads are incurred evenly throughout the production process. The wastage point occurs when the production process is 70% complete. The resulting normal loss is 5% of the input that reaches the wastage point. All loss units are sold at a scrap at 2 rand per kg. 1 kilogram of raw honey after losses and or gains yields 1 kilogram of mamepe. Management accounts extract from the actual results of the month ended 3rd April 2019. Sales, opening inventory, closing inventory, opening work in progress, closing work in progress, raw honey put into production, direct labor cost, production overheads. Mamepe was sold at 65 rand per unit throughout the month. 10,800 of opening work in progress value relates to the conversion cost, and the balance thereof relates to the raw honey cost. Honey processing division completed and transferred 6,000 kilograms during the month. And then we've got our required.
Okay.
What do you think? Very nice, ne?
Yes.
All right. Okay. So I'm gonna start sharing my my spreadsheet. Ne? Actually, I'll send you the spreadsheet once we are done with all the calculations. Ne?
Okay.
Okay, let me share my spreadsheet. Can you see my spreadsheet?
Yes.
All right, so part A, they want us to calculate the beehive division's budgeted annual harvest kilograms for the 2019 financial year. Ne? So let's calculate that. Any idea of where you will begin?
I think we will start on the beehives, the PhD, and then let's see. I'm not sure, the 24 kg, the standard harvest quantity.
Okay.
No, I'm wrong.
But now they want, remember, they just want the harvest. So let's go back to the scenario.
Okay.
Okay. On the scenario, if you check there at the very top, they said a beehive.
Yes.
Beehive utilizes how many hectares? They utilizes 30 hectares, ne?
30.
And then on that 30 hectares, they've got 5 wooden beehives, right? In each hectare. Remember, we want to know how much was our harvest for the entire year. Angisho?
Yes.
Okay, so remember, we've got 5 wooden beehives in each hectare, and we've got how many hectares? We've got 30 hectares,
30.
Right? And then they said, right, for each harvest, the standard harvest quantity is 24 kg of raw honey per beehive. Are you following? So we've got 30 hectares. In each hectare, we've got singayibiza amabhakede awu 5 per hectare ngisho. And lawo mabhakede lawo yiwo ayenza njani? Asikolekele honey, my friend, angisho. And right, and that bhakede eli-1, which is a beehive, it collects 24 kgs. So in each beehive, it's going to be 24 kgs. Are you with me?
Yes.
Okay. So then let's start calculating. So number of beehives?
It's 5.
Number of beehives is equals to 5. Pangisho?
Yes.
Right, and then the next one, we've got a number of hectares. Number of hectares, it's 30, right? And then on each, right, on each hectare, we've got how much? We've got 5 beehives, Angisho. So meaning total beehives, is going to be 30 multiplied by 5, which gives us 150, Angisho.
Yes.
So it means we've got amabhakede 150 azosikolekela how much? 24 kg per bucket. Angisho?
24 kg. Yes.
Right? So now in each bucket, angisho, as we just said, all right, it's kolekela 24 kg. Now we want to know how many kgs did we harvest. Are you with me? So total harvest.
Yes. It's 3,600.
It's going to be 150 times 24, which is 3,600 kgs. Any issues there?
No.
No issues.
No.
Okay, right? But remember our question said, let's go back to the question, right? Our question said, calculate, right, the budgeted annual. Are you with me?
Yes.
Annual, right? So this information that we're given here, this information that we're given here, it is per
month.
It's per 4th month. This is the April information.
Oh, okay.
But let's confirm that, right? Where did they speak about that? Right? They said, I'm reading on the beehive division.
Yes.
They said the division owns and utilizes for farming its entire 30 hectares farm. This farm is rich in nectar producing trees, right? To optimize this natural feed around the entire farm and reduce the feeding cost, beehive division positions 5 wooden farming beehives in each hectare for the duration of the financial year. This positioning represents, right? This positioning represents the maximum number of beehives and yields, right? And yields 3 harvest. Are you with me? It yields 3 harvest. 1 in April, second one in August, and 1 in December during each financial year. For each of these 3 harvest period, the standard harvest quantity, it's 24 kgs of raw honey. Are you with me? So now, what does it mean? It means 3,600 rand. It's for month number 4, right? Then the annual harvest, right? The annual harvest, it's going to be 3,600 multiplied by 3. Then we get 10,800 kgs. Does it make sense?
It does.
Okay. All right. Let's check question C, then we're going to come back to B.
Okay.
B is long, so I want us to do it after our small break.
Okay.
So this is question C. Question C, they said, briefly explain why budgeted fixed production overhead rates should be used in preference to actual fixed production overhead. All right. So what are we saying there? Explanation of the budgeted fixed production overhead rates, right, being used in preference to actual production overhead rates. Okay, and your reason number one, will be, right, the actual rates are, wait a minute, what's happening? I should write here, the actual rates are only received, right, at the end of the production period, right? And then reason number two, right, the use of the actual rates will delay the valuation of inventory, and then the third reason, or third point rather, right? Okay.
Yes.
The costs, right? The costs fluctuate from time to time, right? Right. Therefore, the use of actual rates, right, will result, right, in major differences on the product cost. So you know what this thing means, ne? What we're talking about here, ne? We are talking about a company that produces amagwinya, ne? And what happens is that when the company, right, let's say the budget is to produce 10,000 magwinyas, right, during 1 month, right? So we then say, right, after producing 10 magwinyas, remember the budget is 10,000 magwinyas, right? After producing 10 magwinyas, as an example, we will know how much electricity we are going to use to produce, how much actual electricity are we going to use to produce the 10,000 magwinyas. After producing only 10. Are you with me?
Yes.
So for us to get the actual electricity cost, we will have to get it at the end of the production process. When we get the invoice from ESCOM, that's when we are going to know how much electricity did we use to produce these 10,000 magwinyas. What is my point, right? So after producing each gwinya, we will have to value that particular fat cook. Are you with me? Remember, we don't have a problem with our flour. We don't have a problem with the time that it takes to produce one fat cook, but we've got a problem with the electricity because the actual invoice will only be received at the end of the production process. Therefore, me and my friends, in management accounting or in cost accounting, we then sat and thought that, okay, instead of waiting, right, for the whole month, rather come up with what is called, right, an allocation rate. An allocation rate is some form of budgeted overhead that you will be applying, right, after producing every product, right? So meaning at the end of the production process, you will have your total applied overheads, right? and your
Yes.
actual overheads. Therefore, you will have to calculate the difference, right? And that difference will
Yes.
tell you if you over budgeted or you under budgeted.
Under.
Are you with me? That
I am.
where that theory is coming from.
Okay.
Does it make sense?
It does.
Okay. So we will take our break, right?
Okay.
And then we